Hey all, finance enthusiasts! Welcome to RateSmart, your one-stop guide to all the financial information. Today, we are going to discuss about Q1 results of Reliance Industries Ltd. So, buckle up because we're about to take a roller coaster ride through the financial wonderland of Reliance Industries Limited. This isn't just any company, it's the LeBron James of the corporate world, a Fortune Global 500 MVP and India's largest private sector titan. First off, let's talk stats. Last fiscal year, Reliance Industries Limited knocked it out of the park with a revenue of Indian rupee 974,864 crore and a net profit of 73,670 Indian rupees crore. Oh, and did I mention a market cap of Indian rupee 1772,456 crore? If Reliance Industries Limited were a cricket team, these would be triple centuries in every match. But hey, Reliance Industries Limited isn't a one-trick pony. Imagine a Swiss Army knife with blades for new energy, retail, digital services, and more. Whether it's aiming for a net carbon zero by 2035 or reaching out to nearly every nook and cranny of India through its retail network, Reliance Industries Limited is the jack of all trades and master of each. And let's not forget, they're the eco-warriors of the corporate world. With a dedicated ESG committee, they're not just chasing profits, they're chasing a sustainable future. What's next? So, if you've ever wondered what it's like to be a corporate superhero, you're in the right place. Stick around as we unpack the treasure trove of Reliance Industries Limited's Q1 numbers for FY 2023-24. Trust me, this is one financial saga you won't want to miss. In this segment, let's delve into the financial performance of Reliance Industries Limited for the first quarter of the fiscal year 2023-2024. The company reported a gross revenue of 231,132 Indian rupees crore, which marks a 4.7% decline year-over-year. On a brighter note, the EBITDA, earnings before interest, taxes, depreciation, and amortization, stood at 41,982 Indian rupees crore, up by 5.1% YoY. The profit after tax, PAT, was 18,258 Indian rupees crore, down by 5.9% YoY. While this indicates a decrease in net profitability, it's crucial to understand the factors contributing to this, such as increased expenses or investments in new ventures. While a decrease in revenue could raise eyebrows, it's essential to consider this in the context of market conditions and strategic shifts the company might be making. On the other hand, Reliance's EBITDA increase suggests that the company's operational efficiency has improved, even if the top-line revenue has seen a dip. Capital expenditure, Reliance Industries Limited has invested 39,645 Indian rupees crore in capital expenditure, a significant amount that likely goes into expanding and upgrading its diverse business segments. Outstanding debt, the company has an outstanding debt of 318,685 Indian rupees crore. While this is a substantial figure, it's important to balance it against the company's assets and revenue streams. Cash and cash equivalents, with 192,064 Indian rupees crore in cash and cash equivalents, Reliance Industries Limited has a strong liquidity position. This could be instrumental in funding future projects or reducing debt. In summary, while there are areas where RIL has experienced a decline, the increase in EBITDA and strong cash reserves indicate a robust operational framework and financial flexibility. These numbers offer valuable insights but should be interpreted in the broader context of the company's long-term strategy and market dynamics. Now, it is time to zoom into the digital galaxy of Jio Platforms Limited, the tech titan that's redefining India's digital landscape. Grab your popcorn because this is a show you won't want to miss. Financial fireworks. First up, the numbers are out of this world. Jio Platforms Limited's quarterly revenue hit 30,640 Indian rupees crore, up by 11.3% YoY. And EBITDA? A record 13,116 Indian rupees crore, up by 14.8%. If Jio Platforms Limited were a movie, it'd be a box office smash hit. Subscriber tsunami. Now, let's talk fans, or should I say, subscribers? Jio Platforms Limited added over 9 million new users this quarter. That's like adding the entire population of Sweden to their user base in just 3 months. Data mania. Hold on to your hats, because the data usage is off the charts. We're talking about 25 gigabytes per person, per month. It's like Jio Platforms Limited has turned everyone into a data-hungry monster, and they're loving it. Jio Fiber's dominance. Switching gears to broadband, Jio Fiber is the undisputed king, claiming an 80% share of new additions. It's like the Cristiano Ronaldo of broadband, always scoring, always leading. Churn and earn. The monthly churn rate is down to 1.8%, meaning Jio Platforms Limited is not just attracting users but keeping them hooked. It's like a TV series with cliffhangers you just can't stop watching. 5G and beyond. The adoption of 5G and ramp-up of FTTH services have led to a 28.3% YoY growth in data usage. It's like Jio Platforms Limited is already living in the future, and we're all just catching up. The grand finale. So, what's the moral of the story? Jio Platforms Limited is not just a segment, it's a revolution. From sky-high financials to groundbreaking innovations, Jio Platforms Limited is the superhero in the digital universe of Reliance Industries. So, keep your eyes peeled, because if this quarter is any hint, Jio Platforms Limited is just getting warmed up. Get ready to unpack the shopping cart of success that is Reliance Retail. If retail was a sport, this segment would be the MVP of the season. Let's dive in. Financial fireworks. First off, the numbers are sizzling. Quarterly revenue? A sky-high 69,948 Indian rupees crore, up by 19.5% from last year. EBITDA? 5,139 Indian rupees crore, soaring by 33.9%. It's like they've got the Midas touch, turning everything to gold, or should I say, cash? Retail mania. Hold on to your hats because this quarter saw the highest ever footfall, 249 million people. That's almost like filling up Wembley Stadium over 2,700 times. Plus, they opened 555 new stores. Talk about retail therapy on steroids. Category champions. Grocery, consumer electronics, and fashion and lifestyle are the star players here. Imagine these categories as the power hitters of a cricket team, each smashing it out of the park. Digital dynamo. Digital commerce made up 18% of total revenue. That's like having a superstar sixth man in a basketball team, coming off the bench to score big. Strategic alliances. They've also sealed the deal with Metro Cash and Carry India. It's like adding another all-star player to an already stacked team. Growth galore. Consumer electronics grew by 14% YoY, and the grocery segment? A jaw-dropping 59% growth. If this was a race, they'd be lapping everyone else on the track. The bottom line. So, what's the takeaway? Reliance Retail isn't just playing the game, they're changing how the game is played. From financials to footfall, they're setting the gold standard in retail. Stay tuned, because if this quarter is any indication, Reliance Retail is a saga you won't want to miss. Alright folks, fasten your seatbelts because we're zooming into the world of oil to chemicals, the Swiss Army knife of Reliance Industries operations. It's got more layers than a Bollywood drama, so let's break it down. The financial roller coaster. First up, the numbers. Quarterly revenue dipped to 133,031 Indian rupees crore, a 17.7% slide from last year. EBITDA? Also down by 23.2%. But hey, life's a roller coaster, and this segment is no exception. The key is to look beyond the numbers. The O2C universe. This segment is a universe unto itself, covering everything from refining and petrochemicals to aviation fuel. Imagine it as a buffet where you've got everything from appetizers to desserts, but for the industrial world. Strategic power moves. Now, let's talk strategy. Jio BP is making waves with fuel economy diesel and compressed biogas. It's like the Elon Musk of the O2C world, always pushing boundaries. Plus, Jio BP Pulse is now the country's largest charging point operator. Talk about electric moves. Facing the storm. But it's not all sunshine and rainbows. The segment has had to navigate some choppy waters, like recession fears and high interest rates. It's like batting on a tricky pitch, but they're still in the game. The silver lining. Despite the hurdles, this segment has shown the resilience of a marathon runner. Remember, the year-over-year comparisons are a bit skewed due to some historic highs last year. So, don't count them out just yet. Wrap up. In a nutshell, the O2C segment has had its ups and downs, but it's the strategic plays and the ability to adapt that make it a segment to watch. It's like a blockbuster movie with a twist ending, you don't want to miss what comes next. Alright, friends, buckle up. We're diving into the high-octane world of Reliance Industries' oil and gas sector. If you thought oil and gas were just about drills and barrels, think again. This segment is on fire, and not just literally. Financials that wow. First off, let's talk money. The quarterly revenue shot up to 4,632 Indian rupees crore, that's a whopping 27.8% increase from last year. And EBITDA? A jaw-dropping 4,015 Indian rupees crore, up by nearly 47% YoY. If these numbers were a cricket match, we're talking sixes all the way. What's fueling the fire? So, what's behind this surge? Higher gas prices and new production fields, baby. The KGD6 field is the star player here, kind of like the Virat Kohli of oil fields. Price realization. The average price for KGD6 gas was $10.81 per MMBTU, up from last year's $9.72. That's like upgrading from a regular coffee to a fancy latte but for the same price. Deep dive. Now, you might be wondering, why such a strong performance? Well, it's not just luck or market trends. It's strategic moves, like new production fields and better price realization, that have turned the tables. In a nutshell, to sum it up, the oil and gas segment is not just surviving, it's thriving. It's like the underdog team that nobody saw coming, but now they're stealing the show. So, if you're keeping score, Reliance's oil and gas segment is hitting it out of the park. Hey, everyone! Get ready to switch channels to the media business segment of Reliance Industries, where the action is as hot as a primetime drama. Financial blockbusters. First up, the numbers are rolling like end credits, and they're all stars. Gross revenue? A jaw-dropping 3,790 Indian rupees crore, up by 143.3% YOY. EBITDA? 108 Indian rupees crore, soaring by 56.5%. If this were a movie, it'd be a blockbuster hit on opening weekend. TV and digital domination. In the TV world, the network is killing it with an all-India viewership share of 12.3%. That's like being the top-rated show week after week. On the digital front, Network 18 is India's #2 publisher, reaching nearly half of India's internet-savvy population. Talk about a digital sensation. Revenue rockets. The revenue growth is so strong, it's like a superhero lifting a skyscraper. Thanks to Viacom 18 and record advertising revenues from IPL on Jio Cinema, the cash registers are ringing non-stop. Content kings. Local 18 and First Post are the scriptwriters of the digital age, creating new content formats that have audiences glued to their screens. And let's not forget Big Boss OTT, which became the most streamed entertainment property in India. It's like the Game of Thrones of Indian reality TV. The final take. So, what's the big picture? The media business segment is not just a channel, it's a whole streaming service packed with hit shows, blockbuster revenues, and a fan following that's growing by the minute. Before we sign off, let's delve into some key financial ratios that paint a fuller picture of Reliance Industries Limited's financial health. Debt service coverage ratio, at 1.66, down from 1.76 last quarter but still above 1, indicating the company can cover its debt obligations. Interest service coverage ratio, standing at 5.18, this ratio suggests that RIL is well positioned to meet its interest expenses, a sign of strong operational efficiency. Debt equity ratio, at 0.43, this ratio indicates a balanced capital structure, leaning more towards equity, which is a good sign for investors. Current ratio, at 1.21, up from 1.07 last quarter, this shows improved liquidity and the company's ability to meet short-term obligations. Long-term debt to working capital, at 2.57, down from 2.97 last quarter, indicating better management of long-term obligations relative to available capital. Current liability ratio, at 0.45, a slight decrease from 0.51 last quarter, suggesting better management of current liabilities. Inventory turnover, at 5.25, although lower than last year, it indicates efficient inventory management. Operating margin, at 11.4%, fairly consistent with previous periods, indicating operational efficiency. Net profit margin, at 7.9%, slightly down from 8.9% last quarter, but still a healthy rate, indicating good profitability. In summary, these ratios suggest that Reliance Industries Limited is not just a revenue-generating machine but also a well-oiled operation, balancing growth, profitability, and risk effectively. Alright, folks, as we wrap up this financial roller coaster, let's take a moment to recap the big picture for Reliance Industries Limited in Q1 of FY24. The big numbers. Gross revenue stands at 231,132 Indian rupees crore, a slight dip compared to previous quarters but still a mammoth figure. EBITDA is at 41,982 Indian rupees crore, showing a consistent uptrend from both Q4 FY23 and Q1 FY23. Profit after tax is 18,258 Indian rupees crore, a bit softer than last year but still a strong showing. Segment highlights. Oil to Chemicals, O2C, has an EBITDA of 15,271 Indian rupees crore, a dip from last year but still a significant contributor. Oil and gas is the rising star with an EBITDA of 4,015 Indian rupees crore, showing impressive growth from both Q4 FY23 and Q1 FY23. Retail is booming with an EBITDA of 5,151 Indian rupees crore, a solid uptick from previous quarters. Digital services, the backbone of the digital age, reports an EBITDA of 13,721 Indian rupees crore, maintaining its strong performance. The final take. The total EBITDA across all segments is 40,425 Indian rupees crore, almost on par with last quarter and showing resilience in a dynamic market. So, what's the takeaway? Reliance Industries is a multifaceted giant that's not just surviving but thriving in various sectors. Whether you're an investor, a consumer, or just someone keen on India's corporate landscape, Reliance is a name you'll want to keep an eye on. That's a wrap for today's deep dive into Reliance Industries Q1 FY24 financials. If you found this insightful, don't forget to like, share, and subscribe for more financial sagas. Until next time, keep crunching those numbers.